In today's video, I want to talk about Palantir stock, ticker symbol PLTR. A lot of you guys might know me from the Palantir community. A lot of you might know me from Amit's channel, who's literally the lead in the Palantir community in terms of making social media content. And a lot of you have been in Palantir since single digits. And you guys don't know what to do with your shares. You guys have a lot of 10 baggers, 15 baggers, even 20 baggers, and you don't know what to do with your shares. 20 baggers if you have options, right? Sometimes even more. A lot of you guys went from nothing to millionaires to, in some cases, multi-millionaires just from Palantir. And to you, kudos. Everybody laughed at the community, but at the end of the day, laugh now, cry later. We weren't never crying. We were laughing before, and we're definitely laughing right now. So the question is, what do you do with your shares of Palantir? What do you do with them? Do you sell them? Maybe, if that's your prerogative. But I'm going to give you a different type of strategy, and this strategy is going to be selling covered calls against Palantir. Selling a covered call, if you're unfamiliar, is if you own 100 shares of a certain stock, in this case, Palantir, you are saying, I am willing to sell my shares at a certain price, we call the strike price, at a certain date, we call the expiration date. And for this, you collect a premium. Somebody buys it from you. You're an option seller. Maybe you're familiar with being an options buyer. Well, the buyer pays an option seller. At the end of the day, you are the bank. If you want to know the basics of options trading, just click on the link up above. But the question is, Adam, Palantir made a huge run. I don't want to sell my shares. And for this, I'm going to tell you there's a special technique. There's a special way that I sell my covered calls on certain stocks like a Palantir, like a SoFi, like a Robinhood that absolutely ran up like crazy, where you want to just get some income against those shares, but you want to be as safe as possible. So there's a different strategy that I do. Instead of going 4 weeks out, 20 delta, looking for 2%, I'm going 4 weeks out, 1 or less delta, at some points even 0.05 delta maybe, and I couldn't give a flying fizzle the amount of premium that I'm collecting, because the name of the game is collect some premium to put in your pocket while you still hold the shares of Palantir and still participate in asset appreciation of the share price. So the goal is not to sell covered calls just to make premium. The goal in this specific video and this specific strategy is to participate in asset appreciation, making sure that your shares go up as normal, but at the same time making a small amount of premium on the side that absolutely adds up if you do this over the course of 12 months. If you're still confused after this video and you guys have more questions, instead of doing months and months of research, why don't you book a one-on-one with me, coaching down below, purely entertainment, never financial advice. If you guys are tired of doing research or you guys have questions about something in finance and you want some entertainment, click on the link down below to book a one-on-one 45-minute coaching session with me personally. At the time, I'm going to be able to share my screen with you and you can share your screen with me so you get the most possible out of the one-on-one booking. Now you might say, well, Adam, that's fine and dandy, but can you show us some examples of you doing this before we even get into this video? And yes, I could, because I already made one of these videos about a month and a half out. Take a look at the screen. This video right here is titled Sell Covered Call Options on Palantir Stock with a 95% win ratio. And a lot of you guys thanked me and said, Adam, you did a fantastic job. And we ended up actually doing these options and it ended up being perfect. And if you click on the actual video, you're going to see that my strike prices right here was roughly $160. And I gave you guys a couple of different scenarios. But at the time, I was saying do a June 13th contract for $160 strike. And we all know that Palantir did not hit $160. So this is an absolute winning play. Now I'm going to show you another scenario where you could sell a covered call today for 4 weeks out and collect premium while holding your shares of Palantir. Again, the goal is not to get rid of your shares, not to get assigned. This is not an exit strategy play for a covered call. That's a different type of strategy. This is a strategy that alongside with asset appreciation, you're collecting some side income that you can use for your bills or use to buy more Palantir or use to buy a different position because Palantir absolutely is a beast. Take a look at the screen, but if you want to watch that Palantir video in totality, just click on the link up above and then come right back here and let me show you how I would set this up. The first thing to do is look at the next earnings, okay? They have an earnings call on 20 days. So you want to be very wary of the earnings call. And the earnings call is going to be exactly on August 4th after hours, which means you have two choices over here. You can trade an option, sell call, and we're not going to pick a strike yet. And you can either do it for 1 week, 2 weeks, or 3 weeks. In this particular case, I'm going to do a 3-week play. So normally I would do a 4-week play, but today I'm going to do a 3-week play. The reason I'm doing a 3-week play is because I want to avoid the earnings call. I want to give myself as much possibility as possible for asset appreciation without increased volatility due to this earnings call, which is going to be happening on August 4th. So I want to get out of that play. All good? You guys following? Now let's go take a look at the technical analysis. On the technical analysis, Palantir is absolutely a beast. Maybe it shows a little bit of cooling off right now on the stochastic oscillator. However, on the RSI, it still has room to grow. It's like kind of on the upper end, but still well below that 70 level. And if you go to the chart, literally Palantir is at the top of the Bollinger Bands. It's definitely getting extended. There was an announcement today, actually. Shout out to my man Amit, by the way. If you guys don't follow him, he has an amazing channel. It's at Amit Investing. Definitely follow him on Twitter. This guy is like OG. It was me, him, and Tom at the time, the first 3 channels covering Palantir. So shout out to the homie. And he said that breaking, President Trump will announce a $70 billion in AI and energy investment today. And participants will include BlackRock, Palantir, and Anthropic. So Palantir is literally front and center. And as you can see, they've just been absolutely killing it. Accenture Federal Service Partnership, 100 million nuclear company deal, Blue Fargo Alliance bringing warp speed to warships, SAP partnerships, Fannie Mae deal, Bain deal, Ecuador Customs Agency partnership. And Palantir just keeps executing without fail. I'm looking for another entry point and I just cannot find one. But that's okay. I'm still going to be looking. I'm happy for everybody. My kids own tons of Palantir. My other family members own tons of Palantir. I don't currently own Palantir, and that's okay. So now that kind of explains of why you're seeing the chart like this, right? So it's at the top side of the Bollinger Bands, well above the 20, the 50, the 100, the 200. I mean, it's an absolute monster. So now you're like, okay, well, is it overbought or not? Then think it's getting towards the overbought, but that's really good for you because you want to sell covered calls on green days. And if tomorrow Palantir opens anything even or green, you're going to be getting fantastic premiums, probably even better than I'm going to be showing you in this video. So now let's actually trade the options. Press sell, press call. And like I said, normally I would do 4 weeks, but we're going to do 1 week, 2 weeks, 3 weeks. And I hope you guys appreciate the strategy. It's not copy and paste. It's not cookie cutter. It is literally semi-custom for certain situations. And that is how I rock on this channel. Although like 90% of the trades are going to be very similar, 10% of the trades are unique, specifically like cases like this. So now we're going to have to actually do a strike price. Right off the bat, I'm looking at this, and the very first strike price that I want to be at is minimum $170. I want to give myself a lot of room to grow. Probably or possibly, I might be doing a $175 strike. Now, assuming that you just bought Palantir, I'm going to calculate how much percentage you would get. If you bought Palantir for $10 or $50, the percentage would be crazy. But let's say you're buying Palantir today at 149, let's call it. So let's see how much percentage I would get. Divided 100 divided by 149 equals, and then if you times it by 125, which would be the 170, times 1.25, this will give you roughly 0.8%. Now you might say, well, Adam, 0.8% really, really sucks. And to this, I'm going to say, yeah, possibly. But if you factor in getting 0.83%, 0.84%, and you times it because you're doing this by 3 weeks, if you take 52 weeks and you divide it by 3, we're talking about somewhere about 14 times, and you times it by 14, you come up with almost 12%. Imagine you get full appreciation of your Palantir shares and you're getting nearly another 12% on top. That is factoring in if you bought Palantir at $148. But let's do some interesting math. Let's say you bought Palantir not at $10, but let's say you bought it at $50. Okay. Now, if you take this and then you're going to times the $50 by the same 125, 1.25, all of a sudden the percentage that you're collecting is 2.5% for a 3-week play. And then if you times it by the same 14, imagine this. You are making all the gains of Palantir and you're making 35% against your initial investment, additional of appreciation. Pretty cool, right? It's not bad at all. It's a really, really cool system if you appreciate it and you respect it. You got to respect the rules of the game. You can also do a 175, either a 170 or 175. For a 180, it's just out of here. It doesn't make sense. So if it's me, I will be picking a 170 or a 175. And then I'm going to go into it, why I would be doing this. But before I do, if you just want to see how to do this, you press sell call, you press this little button over here. Over here would be how many shares you have divided by 100 is how many things you have. So for example, let's say you have 200 shares, you would do 2 contracts, right? If you have 2,000 shares, you would do 20 contracts. Or you can sell against partial of your shares. You don't have to sell against everything. In any case, let's say you only have 100 shares. Just to make this easy, you collect your $125. You would press review order. And I don't have enough shares, but if I had enough shares, this would be queued for tomorrow during trading hours. You could go 175, you could go 170, either or is a decent play. If you guys want to be extra cautious, just do the 175. But let me show you a couple of things. First of all, let's do some math. And then I want to show you some interesting things. Let's say 149 times 1.15. So you're giving yourself at 170 or 175, roughly a 15 to like 17% run rate. Now let's go to Palantir. Some people can say, well, Adam, Palantir can pop. Sure, Palantir could pop. But Palantir is already trading at the tops. As I showed you, all of these technical analysis is literally just trading tops. So it's probably going to end up cooling down, at least before earnings, where then it can pop. That's why we're not doing an earnings play. We're doing a pre-earnings play. Let's go for the last month. The last month, Palantir is up 3.5%. So if you're doing a 3-week play and you're giving yourself around a 15% runway, that's not bad. Let's go for 3 months. Well, if you take 3 months and you go 3 times that 15% runway, that's 45%. You're almost at the movement, the peak movement over the last 3 months. You can do it for the year to date as well. The year to date, it moved 95%. And if you take 95 and then you divide it by 7 months, you're roughly moving 13%, 14% for the month. So anything can happen. Sure, over the last year, Palantir is an absolute beast and it's up 423%. It absolutely ran. However, doing a covered call on Palantir when Palantir is already at $149 and doing a covered call on Palantir when Palantir is $30, it's a completely different covered call. What I'm trying to show you is anything can happen and sure your shares can get called away. The goal here is to know that it's possible you're going to lose your shares, but in reality, you're probably not going to hit the 170 or the 175 level. You're going to collect roughly that 0.86% for a 3-week play, which comes out to nearly 12% of additional income over the course of the year. And even if Palantir is close to that 170 mark, you could just roll it and get a very, very significant juicy premium, or do a Hail Mary and end up rolling it 6 months out to kind of get out of jail free card and save your shares. If you're concerned or don't understand what a Hail Mary get out of jail free card is, just click on this video up here where I explain how and what I did with an NVIDIA call. Guys, I hope you appreciate this. If you guys have any questions, please feel free to ask me down below. Remember, the goal is not to lose your shares or get assigned, but if it happens, it is possible that it will happen. You just make it highly unlikely with over a 90%, more like a 95% in your favor that it will not happen. And you keep collecting premium and you keep collecting income while you keep getting asset appreciation of Palantir. Stay away from volatile situations like earnings. In this case, I showed you guys how to do it. Thank you very, very much. And please click on these videos over here if you missed my other videos and you're enjoying this channel. Thank you very, very much, and God bless you.